Hello and welcome to Nirmal Bang, ladies and gentlemen. I'm Hiral Dadia. We have with us Mr. Krishna Prasad Chigurupati, CMD at Granules India, joining in. Welcome to the show, Mr. Chigurupati, and a pleasure to have you with us as well. My first question coming to you is, firstly, how would you describe business in the last 12 to 18 months with the different phases of COVID that we've seen, the way it's impacted business? However, pharma as a space has been in the sweet spot.
Last 2 years, Hiral, have been very, very challenging. It's not 18 months, 2 years, in fact. And we were always hoping that we'll quickly put this behind us, but it seems to be extending. And even today, while things look very positive, we are not taking anything for granted. It's been very challenging. We had to fight against all odds on every aspect, employee safety to logistics, whatnot, and maintaining production during these tiring times. So things on the financial side were good and bad. Initially, there was some positivity on the business. The numbers first year were looking very good, which I don't think is really a need for the product which we have having gone up or anything like that, because we are in products which are not COVID related except paracetamol. And but business was good initially, and but in the last 1 year, there's been many the aftermath of COVID. There have been many disruptions in supply chain, and logistics were in a very terrible situation. Prices of raw materials shot through the roof. Shortages have happened. Freight rates have shot through the roof. Availability of containers has become a problem. Timelines, what used to take about 20 days to get from China now is taking 45 to 75 days. We don't even know where the containers are. And our shipments, which used to take, again, 30 to 40 days between Europe and US, now are going up to 75 days. So challenges everywhere, not only costs, even logistics, supplies, and meeting our customer requirements. Our inventories have gone up, were leading to more working capital requirements. So many issues have happened in the last 12 months, especially on logistics and cost increases. And moreover, at least for us, especially for us, one of our key raw materials, there were very few manufacturers in the world, and 80% of the product came from China from only two manufacturers. One of them shut down due to environmental reasons, and we had a lot of shortage of this material. And we could have made this material ourselves, but then we were hoping that the manufacturer in China would come back, and some people in India are also setting up plants. And we felt that since all this capacity is coming online, there's really no need for us to invest into chemicals today. We might as well invest into pharma and APIs and formulations. Now it looks like the manufacturer is coming back, so there's some hope. And I only wish that we don't have to start this chemical ourselves.
Right. So overall, if you could just help me understand, you did mention a couple of challenges that the business has faced, especially in terms of logistics, other expenses, increase in costs. Are you expecting this kind of trend to continue? Because that has had a major impact on the margin front as well.
Yeah, it's been terrible on the margin front. And actually, the certain B2B customers, we were able to pass on some price increases, not fully. And also with our B2C customers, price increases have been very, very challenging because there was also enough competition. I mean, we were not able to get real price increases. So we were hoping things would normalize. But the good news is, even though for one or two materials, even last quarter, the prices have gone up, overall, the increases have stopped. Some solvents have come down, not making a significant impact for us. but we see a slight downward trend. And logistics on the freight side, I haven't seen any improvement. Some of the routes, actually, the freight rates have gone up, even though others are maintained. So we are just waiting to see the downward trend. And more than the downward trend, the most important thing for us is availability of containers and also reduction of sailing times.
Right. And overall, if you see in terms of the three segments of business between FD, PFI, as well as the APIs, share in terms of APIs and PFIs have increased. So is that the trend that we are expected to see, whether revenue mix in terms of a share that comes in from FD is expected to keep going down? What kind of mix are we expecting in the next 18 to 24 months?
FDs will continue to actually grow, Hiral. And if you see the last many years, FDs have steadily grown to as high as 57% or 58% of our total revenues. But however, last 2 quarters, I mean, there's been a slight decline. And this quarter was the exact past quarter, immediate past quarter was only 47% was the share of FDs. And this was mainly because there was and most of our business on FDs is B2C in the US. And most of these distributors in the US have started rationalizing their inventories. And also some of the new launches which we have planned did not take off as expected. And now, but this quarter we see an uptick in the demand from our customers. And we may come back to more than 50 in this quarter and slowly keep increasing. There are a lot of launches planned in the pipeline. We definitely are confident that the FD percentage will increase. In addition, Hiral, it's paracetamol. While paracetamol quantities have not increased, the prices have drastically increased, maybe more than 2 times or above. And that's because our raw materials have gone up almost 3 times. So some of the price increases we were able to pass on, if not fully. And because the sale value being higher, not exactly the volume, that also led to an increase, an artificial increase in the revenues from paracetamol. That's another reason why APIs have gone up. PFIs, yes, PFIs all do continue to grow, but the biggest growth will come from FDs.
Right. And overall, if you see in terms of geographies as well, share of India, share of North America has been decreasing slightly in the previous quarter. And I did read that it was mainly on the back of higher paracetamol sales that we did see growth in Europe. So what is the normalized mix that we are expected to see?
I think going forward, at least in the next year, I think US will contribute about more than 50%, between 50 to 55%, and Europe will be about 30%, and India and LATAM and other markets would be around 20 to 25% max.
Right. And overall, if you see, in terms of where the different segments go, as you mentioned, that FD will be one of the major contributors in terms of revenue. So what is it that we are doing in terms of the FD segment where we are expecting that growth to come in terms of launches? So what are we launching?
So there are many products which we have filed and we continue to file. And this year also we plan to do at least about 10 to 11 FD filings. And when I say FY23, and the new products that are coming in is what is going to drive the growth. And also, most of our products, FDs, we are backward integrated. So our APIs go into our PFIs and FDs. So in absolute terms, if you consider the intercompany sales or interdepartmental sales, APIs would be the highest. But then APIs are being converted to FDs. So that's the reason. APIs keep going down a bit and FDs keep going up. All the margin that we make is added up, FD, PFI, API margin, PFI margin, and FD margin. Always, all that is unleashed at the FD stage.
Right. And overall, you did mention about higher inventory buildup as well. How are you seeing the inventory situation from here on?
It all depends on the logistics, Hiral. We don't know, and if the logistics improve and the sailing times come down, definitely the inventories will go down. So actually, I would not be able to say when that is going to happen, even though we think we always like to think positively, thinking the next quarter is going to happen. So let's see what happens.
Right.
But we can't provide anything for that. While
Absolutely.
inventories are a concerning thing, it doesn't really uh, harm us that much because the working capital for us is not really very expensive. We borrow at less than 1%. So that's not a real concern. Only thing we have to be a little cautious about the short dated product, which you always are cautious about.
Mm. Mm. Right. And overall, so how are we expecting the R&D costs as a percentage of revenues? Because we are looking at good amount of launches in the next year as well. So what is the strategy going to be on the R&D spends?
R&D in the past we hardly spent about 3 to 4%, 3%, but going forward it will increase. And we are actually embarking on a new strategy or a transformation within the company, where we are going to concentrate on sustainable technologies, and everything is going to go green and also highly efficient processes. All our manufacturing R&D is going to be driven by, uh, I mean, a different approach, which is all focused on sustainability. So it's green, green chemistry, continuous flow chemistry, and it will also be enzymatic biocatalytic reactions. So where the efficiencies are high and the wastage is going to be less. And also with regards to energy, also we are doing so many things where even our energy requirement not only coming down, will all be green. So we are working on a lot of initiatives, and all this will need a lot of R&D going forward. So we are working on a strategy. R&D will go up, and till our blueprint is ready, I would not be able to say how much, but definitely it's going to go up.
Right. And overall, if in terms of where the debt situation, the net debt to EBITDA is concerned, we are at levels of around 1.1 time, around 1 times. So is that the level that we look to maintain, and are we comfortable at that?
One is absolutely no issue, Viral. It's absolutely no problem. But even that today, if you see, because of the inventory buildup that has happened, otherwise even that would not happen. But that is not at all a concern for us at this point in time. We see
Okay.
comfortable cash flows going forward. We are investing, and that's the reason that otherwise, if we are not investing, even the working capital can be totally financed by our internal accruals. So that is
Right. And overall, if you have to see business into divisions of core and other molecules have been going up slightly on a steadily basis. I think from 14% that we were at in around FY18, we've already gone up to 19%. Share of core has started to come down. So what's that mix that we are looking to maintain basis our strategy from here on?
so everything is growing, Hiral. So the percentages will all depend which is growing faster. Even the core business, now we were only focused on the US. Now we are getting into Europe. This quarter we'll do a few launches in Europe. And also we are getting into Canada, South America, and South Africa and other geographies. We also will be looking at the emerging markets, many more emerging markets. So there is a lot of potential for the core products which we don't want to lose out on. And also the new launches that are coming in. All the new products that we are filing are being filed across the world, at least major geographies of the world. So I mean, they will also be growing, but the outlook is in the next few years. I think while the core products grow, the share of non-core products could go up to 30%.
Okay, so non-core products could go up to 30%. Right. And overall, in terms of business strategy, in terms of growth from here on, what are the key highlights we should be looking at?
It's all the new, I mean, like I said, okay, let me go back a step and say we are fully integrated right from APIs to finished dosages. We buy very few APIs for our formulations. So, and now that we are going for more efficient manufacturing of our APIs based on sustainability and green chemistry, uh, I mean, the APIs are going to drive the FD business in future. In the past, the focus on APIs was not as high as it's going to be today. The reduction in carbon footprint and cost on APIs is what is going to drive our future.
Okay. And overall, in terms of manufacturing as well, what's the capacity utilization that we're looking at?
No, today we have been doing about 80%, 75 to 80% now on our FDs. And on our, if you see on our APIs, FDs and PFIs is 75 or so, but APIs, some of the APIs like paracetamol, today we are doing only 60% because of our raw material shortage, and other products maybe about 80% or so. But a Vizag plant, which we have recently expanded and invested more on the APIs, that is free, and that's hardly being utilized for 5% or 10%. So there's potential for utilization, and this year we plan to start utilizing that more and more. And on the FDs again, the new MUPS block is coming up, which we should start qualifications and validations shortly. And once that comes up, our capacity utilization will hardly be about 60%.
Right. And overall, any new investments we are looking to make in terms of manufacturing?
Yes, Hiral, on FDs, we need to, we are going to start a greenfield site. And greenfield site, as you know, we need to start early because the FDA approvals and all will take time. So the designing has started. Actually, this was supposed to have, construction was supposed to have started this year itself. But since we had the MUPS block come up, there was some capacity which we could see, so we delayed it a bit. So this will start next year. And also on APIs, we have earmarked quite a sizable investment on our APIs, our new initiatives on green chemistry. So that will be, in the next 2 years, we plan to invest at least 600 crores there. 450 crores on APIs and 150 crores on FDs.
Right. And this will be over the next, what time frame?
Next 2 years.
Right. Next year, so it will be 450 on FDs and 150 on APIs, right?
And also, yes, you're right. And also there will be new R&D facilities coming up. So we will see how much of the API investment we have earmarked to go into R&D facilities. So we will take a call because R&D, what we are going to do is a little, different from a typical R&D. Different systems are needed. So we'll go, as we go by, we will take a call. But I think overall it will be around 600 crores in the next 2 years.
Right. And very lastly, what's the kind of growth forecast or next milestone we are looking to cross in the next 3 to 5 years?
I mean, for first milestone for us will be, I'm not saying when, first milestone will be to touch 1,000 crore bottom line. And second milestone is to touch a 2,000 crore bottom line.
So 1,000 crore top line. Yes, I understand.
We can talk about it.
So 1,000 crores top line and 2,000 crores bottom line is the next milestone that we should be watching out for as well. Yes, timelines will all depend in terms of how growth plans out, how economies plan out, how COVID plans out. A lot of moving factors now with regards to different businesses, right? All right. Thank you, Mr. Chigurupati. Thank you so much for joining us on the show. It was a pleasure to speak to you, but I think your frame is frozen.
Yeah, I think you'll come back. Yeah.
Yeah. So thank you so much, Mr. Chigurupati. It was always a pleasure to speak to you. Thank you for all the insights that you've given us. Stay safe, good luck, and speak to you soon again.
Thank you, and you stay safe too, Hiral.
Thank you.
You and your family.
Absolutely. Wish you the same.
Yeah.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.